Welcome to Your Success Podcast. We give you actionable insight and stories behind real-life success wherever you go.
Welcome to Your Success Podcast. I'm Angelos, and today I'm really pleased to be interviewing the one and only Mr. Siam Kidd. Welcome, Siam.
Hi. Thanks for having me back.
Yeah, third time round. Really pleased. It's good to have you. So, for those of you who don't know who Siam is, Siam has actually called many crypto moves over the years, which have made his community a lot of profit. But his personal best to date was in 2015 with the Black Monday crash, where he managed to make over £422,000 in 30 minutes, which is not bad going at all. In more recent times, Simon was actually called the January 2018 Bitcoin crash, where he sold all his cryptos and then jumped back in the market at the lows, thereby accumulating a far better position. He's also a regular crypto keynote speaker and an awesome guy all around, and a bit of a fanboy of a certain... we all know who you're a big fanboy of. How's he doing anyway in this society?
Yeah, I guess he's fine. Yeah. I guess if you're worth $25 billion, you're always going to be fine. So,
cool, man. Right. So today's chat is all about what's going on with the stock market. We can maybe touch on crypto if we've got time. So I guess with all that's going on, with Corona, with the panic, with the mass losses we've seen across all of the globe, what the hell is going on? Is this massive loss of confidence in the market generally, or are investors using this as a way of dumping rubbish stock? What's your view?
It's, I guess, both. So just a quick one. I'm a currency trader. I've been a currency trader for 15 years. It's only a recent thing, the crypto stuff. Just want to make that clear. What's been going on? Basically, it'll be much easier if I quickly show you some slides, if that helps. Yeah. So I think we do this.
For those of you at home listening on the podcast, just jump on our YouTube channel and you'll be able to see all the slides that Simon's got to show us.
Cool. Do you see any PowerPoint stuff?
Yes, I do.
Okay, cool. I'm going to quickly reel through these, so you can always pause and look at it. But so I just wanted to share that this is the US stock market from now from 1929 to now. And what you'll see is that there are crashes all of the time. And I mean, these red ones that I've highlighted are just ones over 18%. So you can see they happen all the time. So if you're ever surprised or shocked by a market crash, you really shouldn't be. Because if you look at all of can you see these gray lines all along the thing? Well, these are recessions. Yeah. And if you were to add up all of the time from end of one recession to the beginning of the next one, the average is 8.6 years. So between each recession, it's 8.6 years. So from end of the last one to the start of the next one. So they happen all the time. So so there is some validity in that old saying that there's a global crash every 10 years. So yeah, you should always position yourself that, if you ever are, on a 10-year rally, something that, the trend is your friend until the bend at the end. And what have we done since 2009? We've had a massive rally for the last 11 years. So this was always due. And like for the last year, I've been screaming off the rooftops for everyone to just dump their stock. And I think the real dangerous thinking at the moment is this. Everyone is pretty much down. I mean, we've had a 39% drop in no time at all. It's the fastest crash in human history in terms of the broad equity markets. And now everyone, even close friends and family, are saying, "Oh, it's fine. Markets always go up. I'm in this for the long run anyway." And this is why market crashes always kill the middle class. The rich are always insulated. They got land. They got other bits and pieces. The working class, the working class, so to speak. Sorry, I've got a sniffles. It's not Corona. We've been outdoors all day and whatnot, so it's summer cold, hay fever. So Yeah, so the working class aren't really affected because they're not even really investors. They don't have like equity holdings, etc. So it's the middle class. And what does the middle class always do during crashes? They go, "Oh no, it's fine. I'm in this for the long run, etc." But when you look at this, like when you have a proper meltdown, we've had 3 in the last 90 years. Like if you were to, from the peak of 1929, if you were to have that attitude, it would take you 30 years to get to break even. In the 1966 depression, 34 years to break even. Now this, by the way, this is a log chart with inflation adjusted. So from the top of the tech bubble, it would have taken 13 years. So it's really, it's not good, because during this time, real inflation is running away, which means your purchasing power is just dying, yet your negative equity. And
look what happened at the Japanese.
Yes, the Japanese are still 1988. I think they started the crash. It's now 2020, and they're still nowhere near recovered. So markets don't always recover. The Japanese, and all of the money men, bankers, or people call them, all the people in suits, they all gave the same advice. Just wait, But really, it's like putting your head in under the sand and hoping that the market gets back to normal. And look at the severity of this. So this is basically how fast we've crashed. I mean, this is an old chart. This is the fastest 30% crash we've ever seen. But in terms of how long they last, people think, oh no, we're just going to be locked up for a month or so, and then things will recover. Wrong. Like the average crash, like I'm a student of crashes. I make all of my money during crashes. Like the average crash is about 2 years. So the 1929 crash was 3 years. This is 16 years in 1966, but there are other bits and bobs going on here. Tech bubble crash was 2.5 years, as in from top to absolute bottom, 2.5 years. 2008 crash, 18 months, and this is not going away anytime soon. This is going to be a minimum, absolute minimum of a year crash. So if we had a magic wand and basically went, right, COVID-19 doesn't exist anymore, everyone get back to work, we are still going to go through a 6 to 12 month crash, at least. And that's because the real financial ramifications of everything that's going on right now has not materialized in the markets yet. This little dip here is simply an hors d'oeuvre. I promise you that this is literally a taster of what is to come. So I just want to try and find another chart, which is not a chart, but this. So basically, it's really, you have to imagine that every government, every country out there is just like a person. So here, let's say the average person, lives beyond their means, borrow because rates are cheap. Some hiccup happens and you end up having to spend lots of money. So not everyone has a rainy day fund. So what do people have to do? They have to borrow money from Wonga or whatever. So before you know it, you're in a bit of a downwards death spiral, because you're struggling to pay the minimum interest only repayments on all your debt. And the only thing keeping the show on the road is your job. And then eventually when you lose your job, shit. That then starts even more borrowing until you literally can't, and then you end up in bankruptcy. So you then have to restart level. And here's the thing: whatever happens, the only way that a globe, as in a world or a country, can drag themselves out of recession or depression is that global trade and growth must continue. People need to understand that the only way we can get back to the highs and carry on as normal is economic growth. So basically what's happened is this. Even exaggerating, never.
So, just for people listening in their cars, whatever else, that was a video of loads of cyclists going really, really quickly, and then suddenly one or two trip over, and then it takes down everyone else, and that is basically a representation of what the coronavirus is doing at the moment, right?
Yeah, exactly. Yeah. So never has there been a time where we've had a crash and all people and businesses were forced to shut down. Never. We are literally kneecapping our potential, as in our economic growth potential. So 2008 crash, the tech bubble crash, 1929, no one was saying that you have to stay at home and stop working, which is effectively what's happening all over the world. And the US hasn't even locked down yet. When that happens, Jesus, Elon Musk, it's going to be absolutely devastating. And so, yeah, we haven't even seen the beginning of this. So I guess they're the real things. And I guess I just want to see, can you still see my screen? What do you see?
Yes.
What? A whiteboard? Yes.
Yes.
Perfect. Okay. Right. Got to get my teacher groove on. Okay, here we go. So really, really quickly, and because I guess most people here are not going to be traders. Most people here probably, I'm guessing, if I have to guess, middle class, probably got some savings. They're probably massively underwater right now with their savings. I mean, is that, I don't know your demographic, but is that pretty much...
a lot of property investors, but yeah, that wouldn't be an unfair representation.
Yeah. So what's happened, I don't know what your savings are, but let's just say, I use this all the time, but let's say you've got 100 chicken nuggets as your life savings, okay? And up here, I don't know, let's say each chicken nugget is 100 quid, all-time highs, etc. What's actually happened right now is that we've had a massive shitstorm, and now your chicken nuggets are worth £39 a nugget.
Yeah.
So all of a sudden, you started off with 10 grand of life savings. You've now got over here £3,900 in life savings. And what is every financial advisor and so-called expert telling everyone to do? Hold on, don't worry, this will blow over, blah, blah, blah. Just sit tight, do nothing. If you play the long game, this will be fine. Well, no. As we've already said, you'll be underwater for a minimum of 5 years. Minimum of 5 years if this happens. So what you should do, and by the way, a good rule of thumb with investing is to be a contrarian investor. So always do the opposite of what the public think and do. So because the public, and so for example, what you should do, again, I'm going to have to put on my Siam opinion hat. What I believe, what you should do is you should literally go to cash now. Well, actually, there's always a relief rally. So what I mean by a relief rally, if we go to one of these charts, 1 second. Okay, let's take this, for example. Here we go. So politicians are so predictable, it's ridiculous. It's just funny how predictable they are. So what happens, they're obsessed with, the share price and their optics, because all they want to do is get re-voted in, right? So the shit hits the fan, and if you look at here, this is 2008 crash. Let's say you have the first real shock is down here. So what do politicians do? Oh my God, what do we do? Let's pump stimulus into the economy. Let's do whatever it takes to pump up the stock market back up, especially if you're Trump, because he's obsessed with it. So what we always have is a relief rally. So you have this thing here. Can you see this little rally coming up here? Yeah, it's a stimulus bump, a relief rally, whatever you want to call it, but that always happens. You then have a bigger set of falling, and then you have and basically what happens is you have relief rally after relief rally, but eventually the real kicker in the teeth is after the 50% drop, really, because then it just goes game over.
So then we've seen that in the past few days with the $1+ trillion stimulus package that Trump approved,
Exactly.
And that rallied the market. So what you're saying is...
Well, it hasn't yet. I'm looking at the NASDAQ and S&P 500 right now. It's a little bit of a relief rally. It's interesting. A few days ago, I said, expect this relief rally. It looks like it's happening as we speak. How far it will go, we don't know. That's one thing that we don't know. But yeah, so what you need to do, if you're in this situation right now and your chicken nuggets are worth $3,900, you need to try and wait for this relief rally. Now, obviously, you don't know when, but you have to at least, I guess, most markets will, in this occasion, the relief rally will pull back to something like, in this case, to 50 to 40 pounds, let's say. Yeah, per chicken nugget. And so what I would do now, let's say it gets to 50, I would exit, just go all out, get the hell out of Dodge. Do not have any equity exposure whatsoever. So you will have to materialize that loss. And basically, if you sell everything at the relief rally, let's say you exit and you now got $5,000. Okay?
Yeah.
So you have crystallized your losses, which every professional say, oh no, that's silly, you shouldn't do that. But what you then need to do is wait, just sit on your hands for 12 months at least. And what you'll end up doing is near the bottom, let's say it's 20, you then take all of that £5,000 and you buy as many chicken nuggets as you can, let's say at 20 pounds. Because guess what? That £5,000 into 20 will give you 250 nuggets.
Yeah. And
you originally started with 100. So what then happens is that when this eventually, after 3, 5, 10 years time or whatever, gets back to the £100 level, your 250 nuggets is now worth 25,000.
Yeah.
Not 10,000.
Mm.
That's what you need to do. That's what the math says. Maths does not lie. So it's.
So what you're saying, Simon, is that despite this stimulus plan, which may or may not give what they hope to be a nice little rally, we are inevitably heading for a big downward crash then, aren't we?
Yeah, like no matter what happens.
So my question to you, Simon, is speaking with lots of friends who are quite wealthy, they've lost, well, one person lost £750,000 a couple of weeks ago. He did say to me he was a bit lazy. He should have been on top of that earlier. He's not going to lose too much sleep over it without sounding too glib, because he is a very wealthy person, but either way, it still stings. Is your view that we're heading towards a recession or even a depression at this point?
100%. There is nothing I can, and I've been racking my brains for the last week, like, what am I missing? Because you don't know what you don't know. And we obviously, no one has all of the facts and the data, but you have to always go back to the first principle thinking. The only way you can get out of or avoid a recession or a depression is economic growth. Where is that growth coming from? We've shut shop.
Yeah.
If you put it this way, if a country drops tools for 3 days, that reduces GDP by 1%. How many days are we dropping tools for? A month? 2 months? 3? And also the people that are still working right now, that are allowed to work, I don't mean this in the bad way, they're not GDP contributors, if that makes sense.
Yeah.
So a nurse, for example, is literally one of the best jobs and most pivotal jobs you can have in the UK, but a nurse does not contribute to the GDP, if that makes sense.
Yeah.
Does that make sense? I don't mean this in the bad way. I'm just trying to say that.
Yeah, unfortunately, nurses aren't necessarily paid what their value truly is. Right?
Yeah, teachers and nurses and doctors need to be paid more, in my opinion.
So looking into Siam's crystal ball, what medium to long-term changes do you see happening, not only to the stock market as such, but for society as a general?
So I think with business, what we'll probably see is that a lot of businesses that last and survive this, they're rapidly streamlining themselves right now. They'll quickly realize they don't need a lot of the stuff that they have. They don't need the fancy offices that they have. Everything's going online. This is going to spark an even more of a push for virtual reality and augmented reality. So watch virtual reality go nuts. There are already big businesses out there. I think there's a company in America that has like 250 staff, and they all work in a virtual reality office, which is crazy. So once fidelity gets better and that, as in resolution, etc., it's going to be nuts. So that's one thing.
So we're going to see almost like a mini digital revolution coming out of better fiber potentially, better speeds, more video conferencing.
Yeah, stuff like that. Yeah. It sort of comes into like with 5G. I mean, I'm not exactly a fan of 5G, but now everyone will be like, oh yeah, we've got to really have 5G because it's super fast, and like even this Skype call, the quality isn't as good as as it could be, let's say. Like, I'm not looking at you in 4K, am I? And vice versa. So,
thank God for that.
that then you'd really see how bad my beard is. But sorry, I just have to place this trade. 1 second. Sorry.
Look at this. I love this. Sim in action on this thing. Who says that we can't multitask?
Okay, so there we go. That's it. Yeah, sorry. This is game time for me at the moment in terms of trading. So yeah, so repercussions. And also, I think I've been saying this for a while. We will see universal basic income be rolled out across the globe. We have to. When we're looking at a tidal wave of automation, which is already happening right now, like there's going to be millions and millions of jobs lost. I mean, there will be lots of jobs created. I mean, just like social media manager didn't exist until 5 years ago. So lots of jobs that you have new jobs like robot manager or something like that. But yeah, so when you're looking
virtual reality security,
there we go. Yeah, something like that. I don't know. Yeah. So you'll have so all the wave of automation that's going to make lots of people redundant. We're having this corona stuff. You know, everyone's in lockdown. Like people are losing their jobs, their businesses. Like universal basic income, as in a basic income for all, will come. The US will probably call it a freedom dividend or something like that, but it's pretty much already happening. Like what the UK government is doing at the moment is the first step in that direction. And also one thing people aren't realizing is that this is also going to be their excuse to get rid of cash. Cash is going.
Which has been on the agenda for a long time now, hasn't it?
Yes, it has, yeah. This is perfect. They'll probably say, in order to stop transmission of the disease, of the virus, cash is now a threat. They've already they're raising the max limit for contactless to £40, I think, soon. That'll go up higher eventually. And then, they'll get rid of cash. And then all of a sudden, the government has full access and optics on all of your finances.
There's no cash jobs, there's no this, there's no that.
Exactly. Yeah.
Full control, full visibility right across the board. Look, isn't it ironic that we have a Conservative government implementing probably one of the most socialist policies ever? Who would have thought, huh?
This is pure communism what's happening right now.
Yeah, absolutely.
It's hilarious.
It's just mad how this world has just been turned upside down. Just very quickly, Sam, because I know you're super busy.
No, that's right.
Say Corona 20 comes along in 3 years' time. So we've just recovered. We're seeing the shoots of growth again. Corona 20 comes up. Do you see the markets responding as severely as they've done this time, or do you think we will have learnt, we will be more home workers, or do you think we'll forget it quite quickly and we'll go back to how things were?
Yeah, we'll be way more resilient. Yeah, definitely. Like what will happen now, like there's not many people were following it, and I was loosely following, but the World Health Organization and lots of other health organizations out there were losing budget, like, as in funds, left, right, and center. Like they were being cut. And now this is happening. They're going to be probably the most heavily funded organizations on the planet, as in pandemic response units and stuff like that. So and also there's a new precedent set. Like very quickly, the whole of the country is now, wanting to be on lockdown, etc. And so it'll probably be a normal thing. Like, new pandemic, it's Ebola times 10, right? We know the drill.
Yeah.
Drop tools, universal basic income is out there anyway. I don't know. I'm just being facetious here, but yeah, it's.
And we hope and we trust our governments to be honest and truthful with these things and not use it to their own advantage, right? That's a conversation for another time. All right, Simon, that's absolutely brilliant, man. How can people get in contact with you? Should they want to talk to you about some of the programs that you run, or just they've been inspired by what you said today? What's the best way for them to get in contact?
Yeah, the realistictrader.com. That's my community. It's cool because learning to trade, for example, takes a long time. You can't just do a video course and know how to trade. It's like learning to become a dentist. So what we do, we've got like it's pretty market leading actually. It's a machine learning trading bot. So what we do is we can set you up on the trading bot straight away with a live account. So it's making money for you whilst you learn slowly learn to trade concurrently. So that's that, and that's working really well. We've tested that extensively, and I know this sounds obscene. I sort of cringe every time I say this, but it's making about 20% a month, 10 to 20% a month, and that's due to the machine learning element. Like, that's the missing tech, which I've been missing for the last 10 years. I've played with all sorts of bots over the years, but it's the machine learning part. And ultimately, as a human trader, we are literally the worst types of things to trade, because we sleep, we eat, we're not looking at the charts, we miss setups, we don't have like an endless petabytes worth of market data in our head.
Ego driven.
Exactly, all of that. Whereas the machine learning bot literally takes all the trades that that are in its parameters, etc. But and also we got this new thing, because the thing is, the best time to trade are during crashes where the volatility is nuts. It is ridiculous. And so what we're doing now is we've got this trading pub. So every day when I'm trading, I just open up a Zoom chat. Trading pub's open, and everyone sees my screens and copies me. So and we have like this just transparent log, so everyone can see everyone's trades. But what I did a week ago is I put £30,000 into a new trading account, and I've told everyone this is my crash account, and I'm going to grow this. We've got at least 12 months of craziness, so we need to basically make use of this. And so we've had 5 trading days since, and that 30 grand is now at, just checking, 68, almost 69 grand now. But the thing is, everyone's copying my trades, so everyone else is also getting that profit. So it's nice. So
brilliant. So they can find out at, is it therealistictrader.com?
Yep, that's it.
Cool. All right, Simon, thank you so much again for your time. Really appreciate it. It'd be great to have you back on again. Maybe every quarter we can have these updates.
Yeah, sure.
Catch up on how you're doing, because you do live a very interesting life. All right, Simon, thanks again for your time. And get in contact with you at therealistictrader.com. I've been Angelos, and I'd love to hear from all of you at home. What are your thoughts on what's going on with the stocks? Have you lost anything? Have you made anything? Please get in contact at knowityoursuccesspodcast.com, or contact us on Facebook, Twitter, Instagram, LinkedIn. We're everywhere. So cheers, Simon, for your time.
Yeah,
and
no worries.
See you again on the next exciting episode.
Cool. Yeah, thanks for having me.
You have been listening to Your Success Podcast. Click subscribe for more incredible content. More details can be found at www.yoursuccesspodcast.com.